In this video, I'll show you the one simple setup that has got me multiple six-figure funded. You can pretty much watch this video till the end, walk out and tell yourself that you're a six-figure funded trader. So what you're gonna do is come into the day, right? Price should look something like a range, okay? You mark your liquidities, you mark your highs, you mark your lows, all right? If you're not so experienced, there might be some imbalances right here, there might be some imbalances right here, okay? And this could be Asia, this could be another session, this could be previously highs, previously lows, okay? Highs and lows from the day before. This could also be all-time highs since you're trading futures and it's constantly going up. So then as soon as you mark your liquidities, you patiently wait for one to get taken, all right? Either to the upside or the downside. You don't try to predict whether the highs are going to get hit first or the lows are going to get hit first. That will be risky. Just wait for one to get taken. And you're going to be doing this, and very importantly, during the market opening. Trading futures, so you're not going to be trading this in London, you're not going to be trading this in Asia. You're going to wait for the market to open to give you that volatility and either go towards the highs or the lows. So then as market opens at 9:30 a.m., at 10 a.m., you should have a setup that's forming, right? In the first 30 minutes, we're gonna sweep something. And whilst we have these sweeps in the lower time frames, we might be building some structure for us to position ourselves. So step number one, you're gonna mark your liquidities, right? As we done so right here. Step number two, you're gonna wait for market, all right, to be open. Third step, you already know, you must have a liquidity sweep. And for the fourth one, we're gonna want to see a M5 change a character or break a structure, whatever you like to call it. So let's say that in here, you mark your liquidities. Let's say that this is Asia, this is London, market's about to open, so you already mark your liquidities, market is about to open, you patiently are waiting for that. We do a sweep to the downside. Then, as we got your liquidity sweep, all you need to do is wait for M5 break a structure, and you know that market goes from one liquidity to another. So we have swept the lows to potential gather enough liquidity in order to go sweep the highs. We try to zoom in here, and you will see this liquidity. You would expect something like this, whether it be structure or candles. And I'll give you real life examples of these. But first, I would like to show you Earn to Trade, as they're running a crazy discount on Black Friday of over 60% off if you use the code Dylan. This is on all TCP accounts for the first 2 months. This style of account is the account where you can scale up, double the size after each profit target is hit. As you can see, you can start off with a 50K account and run that up as much as 400K, which is absolutely crazy. Another great part about that is that you need no buffer or cushion required to withdraw any profits. Just a simple $100 to start withdrawing unlimited payouts. You have no upfront setup fees, only after you crest a payout. So even their resets that used to be $100 are now $65 for the 50K. And if the TCP challenge isn't for you, there's also other types of challenges that are more traditional in the space and still get 20% off using the code Dylan. They're US based, they've been 9 years in operation, they've got good reviews, over 4,000 reviews, and mostly on 5-star. But once again, take advantage of this huge promo by using the code Dylan at checkout for a nice 60% off on all TCP challenges. So you got the FX replay tool right here. What we can see is that the previous daily low is right here, previous daily high is right here, but I would consider the high right here as Asia session, and we have a huge gap right here to be filled. You can also go as far as mark out this liquidity right here as well. So now we got our 2 liquidities or even more already drawn. All you want to see now is market opening at 9:30 a.m. As we can see, we already done a sweep of this, but whilst market was not open, so you don't fall for that. This is why we got the step of waiting for the market to get open, as this low might become a trap. So if I draw the beginning of the gap, you can see how the whole gap hasn't still be filled. We go a bit lower into M5, we should have the market opening. All right, as we got it right here, the gap has been perfectly tapped. So as you can see by the candles, it's kind of going something like this, and we're going to position ourselves on stop order right at this high of the wick. So it looks something like this. Stop loss at the lows, target the 3R, and let's just see what price does. And let me speed it up. Boom. TP hit without any problem. This because the range is an overall consolidation, right? Accumulation. You wait for the market to open, so you have your manipulation, and then you have your distribution. As you can see, big sell in order to buy. And as this level became a trap, this right here became a trap as well. Smart money trap cycle. But let's go into the next day and let's show you another setup. So here, the market's about to open, right? You have your two liquidities. You have the liquidity down here still, have the previous daily low, and perhaps you'll mark this inducement right here that it take no liquidity and it's just close to Asia low. All right, so these are your liquidities. And as price is about to open right here, you have the proximity factor saying that the most amount of liquidity might just lie above. So as market opens up right here, you could have taken the longs, although it's risky and I don't really like it because this low, it's too insignificant, it's too irrelevant. So buying immediately from here would be risky, as we could have also just went deeper and lower. So in this case, the longs would look even better, because then you would also be doing equal highs right here. Okay, so market went up. We didn't manage to take advantage of the longs, but we can do, and that has happened right in front of us, is a sweep of liquidity to the upside. Okay? So we zoom in again into price action. We can see that we have some structure right here. Okay, this would equate to something in M1 right here, this low. I only need to see the wicks and candles. So I can put my order right here. I'm gonna see if price wants to go down and not make another high. Okay, it seems that it wants to go lower. So I would have my order right here, probably a stop order if I didn't came late, right? And have my 3R risk reward, or even 4 right here to trap everyone that's positioning themselves around here. Because I know SMC traders will be likely to position their orders around here just because this low made this high with this impulse, but they don't understand that this move was just a liquidity sweep for this liquidity of the previous daily high. So it's super risky to be trading a continuation just after we made a huge liquidity sweep. So right here, let's say we position ourselves like this, and boom, another win. And as you can see, going from one liquidity to another, you could have had also the previous liquidity that we marked to the T, and it would give you 9R. And if we come into the next day, ladies and gentlemen, it's the same thing. Previous daily high, previous daily low. Second step, you wait for market to open, right? Let's wait for that. You're gonna see some big candles, right? The market is already open. It's just waiting for a sweep of liquidity. Right here we've done so, and it's a bit of a weak one, so I wouldn't really trust it, but you can position yourself here. The only thing is that because it's looking kind of shaky, it tends to be a trap. Usually like when you have a little liquidity, boom, being swept with huge volatility, major manipulation, and then it goes to the other direction immediately. When price tends to normally do some slow stuff like this, it usually tends to not respect whatever liquidity sweep is currently doing. So in this day, I didn't position myself immediately right here. I waited, and as you can see, boom, the high got swept. So as I let price develop a little bit more, okay, you can see that maybe this is the good breaker structure that will deliver the price lower. Even though I would prefer to have something right here, maybe if I use a limit right here to come back and test it, and my 3R going towards the previous daily low right here. So as we played out, okay, we wasn't tagged in on a limit by a few, but if we were on a stop order either right here or right here, you could have seen as we would easily be in this trade and take advantage of another nice win. So I'm showing you all of this, 3 perfect days of wins, and I'm sure there's somebody hating on the comments, or you right there watching and saying, well, that's pretty good, you know, that's pretty easy for you to say, FX replay, yeah, you're in backtesting game mode, you know. But what if I told you that I actually caught every single one of these, documented on my YouTube, the full breakdown, and got the proof behind it? This money could literally pay all my old rent, but no emotion. Day, another win, and the proof is right here, boys. 53,000. Win on Thursday, win on Wednesday, win on fucking Tuesday. Bro, so this one made around 1K. This one passed me a challenge. This one passed me a challenge as well. 2 funded accounts from the simple setup that I've just shown you. Now, take this information, apply it to your trading, and hopefully come back to me with a certificate.